Hey guys, Michael Sema here with Nick Maranowski. Today's topic is renovation mortgages, how to buy and renovate your home all on one shot.
So you're probably thinking, what the heck is a renovation mortgage and why do I care? Mike, why should they care about a renovation mortgage?
Well, it's a popular mortgage in today's day, especially with the lack of inventory and the overall demand on properties. Home buyers are really having a difficult time finding their dream home, number one, being able to purchase their dream home because of the competition. But it's a really important topic because a lot of home buyers don't know they have a different option, and everyone's looking for that dream home to be able to move into that's turnkey ready.
Yeah.
That they don't have to do any type of construction because, let's face it, saving money for the down payment is hard enough. To try to save money for the down payment and on top of that for renovation, it's pretty tough for a lot of home buyers. So I think it's an important topic to really talk about, address all the different programs that are out there, and really teach home buyers that there's a different option, a better option. So yeah.
So the idea is that a renovation mortgage allows you in a competitive and perhaps limited inventory market to buy something that either you don't think is perfect as is, or perhaps is well below your budget that you can make into your perfect dream home using one loan to both buy and renovate. So we're going to go through first, what the renovation loan is, how it works, and then we're going to talk about examples of how we can use the renovation loan in specific situations that we know from real world, our lending, and go through it that way. So the first thing is that a renovation mortgage is basically like any other loan. It's a 30-year fixed or 20-year fixed, 15-year fixed, very standard terms, and you also get the same down payment that you would in a regular mortgage. So for example, if you're pre-approved for $400,000 and you're putting 3% down, that's fine, that's perfect. What you can do with that is you can essentially put the same down payment as you would buying the home as is. You put down the 3% down, and then you go back and you add in the renovations or repairs or upgrades, updates, whatever you call it, the way that you want your home to be fixed up or whatever needs to be fixed up, add it back to the loan amount, and you're essentially borrowing all the money that you need to fix the property and buy it, all with the same down payment as you were starting off with. So this can be very powerful in situations, usually three situations that I see often that this comes up in. The first, you're in a competitive market, you're looking for the house that's completely done, perfect, that checks 10 out of 10 boxes. Rarely that's the case. Usually you'll find a home that's checks off most of your boxes, and you'll have to just settle for whatever the other boxes aren't checked. So let's use an example like this. You find the house that's in a perfect neighborhood, perfect school system, it's the right size home, but maybe it doesn't have the right kitchen. It's a little bit dated, call it grandma special. Maybe it's an older home that's a little bit dated, and you need to, you're going to change up the kitchen, the bathrooms, and update it to make it more your style or more fit your family. The renovation mortgage, you can buy the home at whatever the price is, put your down payment, and then borrow that additional money all in one shot, all in one closing.
Yeah.
And then that money gets given out after closing to your contractors and whoever you set up in draws to essentially make sure that as the work is getting completed, it's all done. Another advantage of this would be maybe your budget isn't that big. Maybe you have a lower budget and it's you're a first-time home buyer, and some of the market that you're looking in, maybe in a special, in your town or in your city, it's just a little bit more expensive to get a fully renovated home right off the bat. You can use this to find a fixer-upper, a bank-owned property, get it way below your pre-approved price, and maybe it's in disrepair, so then you don't have a lot of competition for it. These loans aren't everywhere. Only certain lenders have them, and a lot of people don't know about it. So this is your way to get in the door. Yes, it might be a little bit of extra work with a fixer-upper, but think about it. You get a house for well below market value because there's not a lot of demand for that house. Right? You put down a minimal down payment of 3% or 3.5%. of the purchase price, which could be hundreds of thousands of less than what you would have thought you would spend for a house, and you then add in the cost of repairs that you need. Maybe it needs a new boiler, furnace, roof, kitchen. The list is endless. The only thing that you can't add to these programs is luxury items like a pool. A pool would be nice, though,
Yeah,
right?
it would be nice.
But we'll get maybe someday.
Yeah.
So this is a way to get in the door and have something that you can call your own and actually make it the way that you want it. A lot of people, even when the house is already renovated, they just have to deal with whatever the previous owner wanted, you know, in terms of style. So this is a way to not only get in at a lower price point, but also make it exactly how you would want it. Your colors, style, you know, whatever it is that you want it to do. You want to knock down a wall, you want to open up the living room. There's tons of different things.
Right. For a lot of us, especially taking on a responsibility like a construction project that we've never done before, it's a scary thing. And a lot of home buyers don't really know where to even start. Like, in a typical, I guess, construction project of cosmetic work, it's pretty basic. Cosmetic work based on, I don't know, sheetrock and some paint and new flooring. But when it comes to structural and maybe foundational work or electrical, plumbing, what's the normal process? Like, what does a home buyer have to do to make sure that they get the proper quotes and have the proper budget? Because it is a scary thing. How do they know that that budget is really going to be the right budget?
Yeah.
So what's the process in regards to these renovation programs that has that layer of protection to make sure that the home buyer is not underestimating the total project and kind of stuck at the end?
Yeah.
Or overestimating it and overpaying for it?
Yeah. So step one is getting a mortgage pre-approval for a renovation loan for the total amount that you can borrow. So then you know this is the top line budget. Because what you're going to end up doing is you're going to take whatever your cost to buy the property is, add in the cost of your renovations, and for that you're going to have to get a couple of estimates.
Right.
You know, you might have to have, you know, when you're going to find a house, you say, oh, this is a great house, it's a good price, good neighborhood, and you have an idea, you have to get an idea of what that work is going to be, what you want to do, and how much that's going to cost.
Right.
So you might have to bring, you know, a contractor back to see it, to give you an estimate. Say, hey, look, I like this house, but it needs a new roof, it needs a boiler, or I want to change the kitchen. How much is this all going to cost?
Right.
So that way we have a total idea as mortgage lenders, you know, what your payment is going to be. So we have an idea of your budget, because if you're going to buy a house for $300,000, and then you know you're putting down the minimum, right?
Right.
Let's say it's 3%, so you're borrowing, you know, $291, but then it needs $50,000 of work. Okay, then can you still afford a $350,000 loan?
Right.
If the answer is yes, then that's a good way to kind of start so that you can eyeball the total cost of a project. But the other thing that you addressed was this is also a bigger deal, or it might be a daunting situation for most. Don't worry. If the project is big enough, you'll actually have to hire a consultant that we can, you know, refer you to, that's approved by the Department of Housing, that actually oversees the project and the contractors to make sure that you're not getting, you know, screwed or ripped off, that the work is done right, and also that us as lenders don't, you know, get screwed in the end too. So it's basically an overseer that doesn't have an interest in the property or in the work or getting paid like everybody else, like the contractor.
Right.
So it's like someone to kind of oversee, you know, the contractors, to make sure that you're not in the situation where, you know, I don't really know what I'm doing. So
Right.
don't worry about that part of it. That's usually, you know, handled. If it's a small project, you can just, you know, get someone to quote it out and get a few people to quote it out, and, you know, but at least at the beginning stages when you're finding the house, you know, one or two quotes just to get an idea of what it's going to cost. And then you can fine tune that, you know, once you've realized that, okay, I'm going to buy this house,
Got it.
get a contract, and then we can, you know, fine tune the estimates or guide you in the way of, hey, do you need a consultant on this or not?
Right.
But that's a really good point.
Yeah. Now, go ahead. I'm sorry.
No, I was just going to say the other part of it is that if the project becomes big enough, you can actually, and let's say you're buying the home and you know that there's going to be a big amount of work and you can't even live in the property, you can also finance the payments into the loan so that you're not paying for two places.
Which
So
is
let's say
huge.
yeah?
Yeah.
Is that what you're going to say?
I was going to ask you what.
So,
what and how to really cover that initial cost, because if it is a big project that could take up to 3-4 months, how's somebody going to pay rent and a mortgage at the same time? So you're saying
Yeah.
you can build in the monthly payments,
Yeah.
a minimum of 6 months or maximum of 6 months?
Yeah.
Okay.
For most people, this type of loan doesn't go that high, but it can. I mean, you can borrow hundreds of thousands of dollars, and do an addition. You can do almost anything that you'd like. And so for those big projects, not only will you have a consultant to help you along the way, but you'll also be able to finance the payments in the mortgage, so that you're not paying for a place to live and your new house payment on,
Right.
on the loan. So that's really a really cool feature too for those people that are looking into this as a big deal. But for most of you, it's going to be something that's, either getting the house so that you can move into it, maybe it needs some repairs if it's a real fixer-upper and you can't quite move in just yet. So sometimes it's smaller things like that: a kitchen, a bathroom, a boiler, HVAC, a roof, something that, for some reason maybe the house isn't selling, it's a bank owned or something, and it's not selling because most people, don't want to touch it. But you can with the new renovation loans that are out there, and do it all in one shot.
Yeah.
And have built-in equity in the end.
Which is probably the best part of it all, is really building your dream home, but not
Yeah.
paying top dollar for it, and possibly gaining some equity out of it that could really put a lot of money in your future pocket, of course, based
Yeah.
on possibly selling it one day. So perfect example, a close personal friend of mine called me almost 9 months ago, asking me for a pre-approval. They were looking in a specific town that they absolutely love. They're not looking anywhere besides this one town, but property values and asking prices for the type of home that they were looking for were closer to $500,000, and they were really pushing their budget at the $500,000 mark. But it was affordable enough for them to be able to do it. We should have pre-approval, and for the past 9 months, they've been shopping, putting offers in, but getting outbid because properties have been going over asking price. 9 months ago, I did recommend the 2 or 3K construction loan. My friend told me that they're not interested in entertaining a construction project. They'd rather have something turnkey, move-in ready. But unfortunately, they haven't had any luck with it. Finally, he calls me up about 2 weeks ago, and he's like, "That's it. I'm sick and tired of this. Every single offer we put on the table hasn't been approved. People are coming in with cash offers and buying these properties. Most of them are going over asking price, but not only $5,000 or $10,000. Some of them went over asking price by $50,000. So he's like, "Talk to me about this 2 or 3K construction loan." So we sat down and showed him a couple different options. He just put in an offer 3 days ago on a ranch. It's not a colonial like he wanted. He wanted 4 bedrooms. This ranch had 3 bedrooms in it. But got 2 contractors out there, got 2 bids. Ranch, the purchase price on the ranch was $248,000. The overall construction project to add in the second floor to renovate the home the way that they really wanted was about $125,000. So now they're building their perfect dream home based on their likes, their wants, their needs, their personal style, and they're doing it under what the average value for that type of home in the area is going for. And most of those homes that are going for that $500,000 range are older homes. So they're
Yeah.
people are building pretty much an almost brand new home for under $500,000.
So those are some of the added benefits. It's not obviously guaranteed. Different markets are different things, but
Right.
but to be able to pick up a home, and let's use round numbers. Let's say you picked up a home for $250, and then it cost you $150 to and then your total cost is $400,000. That home, when it's appraised based on its finished result, might then be worth $500,000
Yeah.
or $450, and then you only paid $400 for it. So that's what we mean when we say built-in equity. There are some rewards to purchasing fixer-uppers, and these types of situations used to be more popular, years ago. But now it's making a comeback because people aren't finding the home that they want exactly. It is a competitive market, and limited inventory. It depends on where you live. But desirable neighborhoods and desirable, markets, you might be outbid. So this is a way to kind of get in the door, I call it the side door. Everyone is going for the exit, and you find that there's a door that's empty that nobody's even looking at because it's a little bit of a darker hallway. But this is a way to get in and make it, like you said, exactly the way that you want it based on your personal taste and style. And all you got to do is deal with these, couple of extra steps as a with the renovation and the quoting and dealing with a contractor.
Yeah.
But we'll give you the money for it.
Yeah.
Want to learn more information about the renovation mortgages? Click the link below, but most importantly, comment, like, and subscribe, and we'll see you on the next one.